Hi class, my name is Caitlin Harvey. I am currently in Accounting 211 with all of you. This is my narrated presentation for assignment 4, the major assignment. I chose option 1. So I went ahead and I interviewed the CFO of my company, Zoe Holding. We're a recruiting firm that specializes in making temporary and permanent placements in the medical field, physicians, NPs, PAs, allied health, skilled trades, and educational services. So question 1, discuss and explain in your own words how and why accounting is the language of business. And question 2, provide specific examples of how the accounting function in every business or organization impacts the overall organization. So, his explanation of how accounting forms the basis of the language of business can be summarized as follows. He used the axiom known as cradle to grave. Now, the cradle to grave approach starts with a blank piece of paper, which represents the cradle component. This is also known as a bottoms-up approach to the analysis of business and accounting. Starting the analysis with the income statement, which is an important term in the language of accounting, the grave can be considered the completion of an annual 12-month operating period. The income statement endpoint will either result in a profit or a loss. The income statement is also referred to as a P&L, profit and loss, a statement of operations, usually used in the case of presented annual losses, or other similar descriptions, all forming various inputs into the language of accounting. In the cradle approach, an entrepreneur will first describe his or her business idea with the accounting language links that identify. In our company's case, being the generation of fees by placing candidates in roles as required by our potential clients. So in the language of accounting, revenue is the first input in the income statement formula. R minus CGS minus EXP minus tax equals NI. So R stands for revenue. The fees associated with our client contracts are revenue generated from the sale of anything from planes, cars, grapefruits, cattle, computer chips, whatever. The cases are near infinite with other businesses. And then there's CGS or COGS, cost of goods sold. This item represents the direct costs in generating the revenue. EXP stands for expenses, which are fixed and variable and are necessary to running the business, but not directly associated with or otherwise considered CGS, which are directly associated to revenue generation. Expenses include rent expenses, any fixed expenses, salaried administrative employees, insurance premiums on an annual basis, subject to annual policy adjustments, depreciation expense on equipment, and sales salaries and commissions, variable expenses, and other expense items that are directly tied to the volume of business and subject to fluctuations in amounts. Tax would include income tax at the federal level, U.S. and foreign, and taxes at the state level, subject to where the company has operating nexus. NI is net income or net loss as the operations dictate. The NI or NL is closed out in the income expense summary process and moved to retain earnings or retain deficit, with the preceding terms forming more inputs into the language of accounting. The income statement accounts are referred to as nominal accounts, as the income statement is based on annual 12-month period, with the result being closed out to owner's equity, which is also referred to as retained earnings, as mentioned above. The language of accounting uses formalized terms in specific circumstances, as previously discussed above, allowing business people to review and discuss business operations in a common language with fixed and recognizable terms. In his first response to my question, he concentrated on the income statement and its related terms that form the fundamental basis of the language of accounting. So in this slide, he provided the full accounting equation and explained each item in the equation. So A equals L plus OE plus parentheses R minus CGS minus EXP minus tax equals NI, end parentheses. For assets, understanding the term asset is another fundamental input into the language of accounting. Assets in this case could be cash for the sake of simplicity. Assets can be classified as current or non-current based on the expected life of the asset. Cash would be a current asset, and a transportation asset like a truck with a useful life of 5 years would be classified as a non-current or interchangeably described as a fixed asset. So L stands for liabilities, which represent debt or borrowings procured from banks or individual investors. They're also classified into current and non-current or long-term based on the maturity dates of the liabilities. Things like trade accounts payable or normally reported as current liabilities on a classified balance sheet. Bank debt with a term of greater than 1 year would have a current and non-current portion. OE stands for owner's equity. It's subsequently increased by future net income and future owner contributions, can be decreased by future dividend/owner withdrawals and net losses from operations. All these terms further expand the language of accounting and are commensurately used among business people to discuss the strength of a company by analyzing its balance sheet and making decisions as to lending the company money and or making additional investments. So question 2. He weaved his explanation to the first question into responding to the second question. So as a service business concentrating on presenting our clients with the best, most capable candidates to fulfill their operating needs, we must understand the amount the client is willing to pay to fill the position. The client's willingness to pay to fill their open position represents our gross revenue. We must then scour our candidate base to determine the candidates best situated for the open role. So we have a database that we use called Bullhorn. We go through it. We identify specific candidates that match. We reach out to them. We get them on the phone, and we discuss the position with them. And then we talk about rate. So the candidate's acceptable rate is our cost of revenue, COR, the equivalent of CGS in a manufacturing consumer product company or retail establishment. In our business, our acceptable gross margin percentage will determine if we present the role to the candidate. The gross margin percentage is more language of accounting not covered by your first question. To arrive at the gross margin percentage, we would take the revenue less the cost of revenue, arriving at the gross margin dollars. So then the gross margin is divided by the revenue yielding the gross margin percentage. If we as a business had a GM minimum threshold of 30%, we would not contact a candidate if their acceptable rate exceeded the amount that would allow for a 30% GM percentage. This is best explained by way of example as follows. Here is the equation, the client's maximum acceptable hourly rate, which would be considered revenue, the candidate's required hourly rate, which would be the CGS, and then potential gross margin on the placement would be 200%, and then the percentage would be 40%. Our typical operating percentages is, I believe it's between 20 and 25%. The prior analysis is an example of how the language of accounting impacts the revenue and cost of revenue logic we use in determining a candidate to be submitted for a role based on our gross margin percent thresholds. This is an example of using an acceptable level gross margin necessary to cover our fixed and variable expenses to generate a profit before taxes for our own investors. And then on this slide, I put our leaderboard summary. So our total spread year to date is 1.09 million. Cavello Direct, the arm of the company that I work for, is the most profitable service line because of the nature of the placements that we make within the arm of the business. Educational services is more volume-based. Cavello Group is contractor-based, and Avada is skilled professional placements like plumbers, electricians. Educational services is like behavioral health techs, special need teachers. You can see the year-to-date spread is 1.09 million. The highest GP margin percent is 79.03%. The lowest GP margin percent is 18.98%. The highest headcount is 146 in educational services, very volume-based. The lowest headcount is 1, likely 1 permanent placement. And here I have some other graphs that we use in our reporting. The AR waterfall analysis, which is the detailed breakdown of our company's accounts receivable balance, the key metrics, the key performance indicators, the KPIs, and the and the percentage of revenue payments received. So that wraps up my presentation. I hope you enjoyed it, and thank you so much. Have a nice day.